Welcome back to Quest for Profits. Today, we're diving into investing, but with a bit of a twist. We're not focusing on those pricey blue-chip stocks, no sir. Today, we're on the hunt for those promising stocks, the ones flying under the radar, all priced under $20.
Yeah. Think of it like a treasure hunt. We're looking for those hidden gems, those companies with compelling stories, the potential for some serious growth. And the best part is, you don't need a fortune to get started.
Exactly. And to help us navigate this, we're going old school, focusing on that classic long-term strategy, buy and hold.
It's about finding those companies, the ones you believe in for the long haul, the ones you think have what it takes to weather those market storms.
Like planting a seed, right?
Right.
You nurture it, you watch it grow into a mighty oak.
Exactly. Speaking of growth, our first contender in this under $20 arena is, well, let's just say they're looking to revolutionize the very batteries that power our lives. Enovix, ticker symbol ENVX, for you ticker tape watchers.
Enovix. Okay, I'm intrigued. Now, I don't know about you, but my phone could definitely use a battery revolution. I'm holding out for one that lasts longer than, well, my afternoon attention span, honestly.
Well, Enovix might just have the answer. See, they're not just making batteries, they're like re-engineering them from the ground up. They're using silicon instead of that conventional graphite to achieve a level of energy density that's, well, let's just say it's turning heads.
So instead of those tiny incremental improvements, they're talking about a paradigm shift in how we power, well, everything.
Precisely. And that's what's so exciting. Their technology promises faster charging times, longer lifespans for our devices, and even enhanced safety. All critical factors in a world that's becoming more and more reliant on battery power, especially as we move towards electric vehicles and renewable energy.
And it's not just talk. They're putting their money where their mouth is, shifting their manufacturing operations to Malaysia. That's a bold move.
It is bold, but it's strategic too. This move not only streamlines their production, but also significantly reduces their costs, giving them a competitive edge. And it seems the market is taking notice. Analysts are projecting a potential 82% surge in their share value.
82%. Okay, now we're talking, but let's not get ahead of ourselves. We've got a lot more to unpack. Let's move on to our next contender, a company riding the wave of, well, you could say another game-changing technology. We're talking about artificial intelligence.
That's right. This company, InnoData, ticker symbol INOD, they're all about harnessing the power of AI, but not in the way you might think. Forget robots. They're focused on, well, the brains behind the data, the stuff that fuels our digital world.
Okay, so less about sentient machines taking over the world and more about, like, making sense of the mountains of data we generate every day.
It's exactly. InnoData, they specialize in what's called data annotation. Essentially, they're tagging and categorizing data, making it understandable for those AI algorithms. It's like, think of it as teaching machines how to see the world through this data.
Wow.
And business is booming. Their annual revenue, get this, it's skyrocketed by 66%.
66%. Okay, that's impressive. And they just locked down a massive deal, $44 million, with a major tech player. That's not just a vote of confidence. That's a resounding endorsement.
Absolutely. And there's more. They've got this credit facility expansion, Wells Fargo. They bumped them up from $10 million to, get this, a potential $50 million. They are gearing up for something big.
Big, like a potential share price surge of over 78%, because that's what some analysts are predicting. Okay, 2 for 2 in the potential for significant growth department. I'm liking this. But for our final stock, we're shifting gears a bit. We're moving away from those cutting-edge tech plays and focusing on a company I think we all know. We're talking about AT&T.
Ah, yes, AT&T, ticker symbol T, the telecom giant, right? But don't let that fool you. They may be a familiar face, but they're undergoing a fascinating transformation. They're streamlining their focus to stay competitive in this crazy fast-paced market.
It's like watching a veteran reinvent themselves right before our very eyes, and they just made a power move, selling off a big chunk of their DirecTV stake, $8 billion. That's not chump change.
It's a clear signal they're making a strategic shift. They're using that cash infusion to reduce debt, and, here's the interesting part, reinvesting in their core wireless business. They're doubling down on what they do best, connecting people.
And it seems to be working. The market likes what they see. Their stock has been on a tear, up almost 45% in the past year. Talk about a comeback story. But the question is there still room for growth?
That's the real question, isn't it? Is this just a blip on the radar or a sign of things to come? It's a gamble, no doubt, but the potential payoffs, if they can pull it off, well, let's just say they're huge.
It's like they're going all in, betting on the future of 5G and whatever comes next. But like you said, it's a fast-paced world. A lot can change. So where does that leave us with these three companies? Are they worth holding on to for the long haul?
That's the million-dollar question, isn't it?
Yeah.
And it all comes down to value. It's about more than just chasing hype or flashy numbers.
It's about looking beyond those trends, right? To the things that really matter.
Exactly. So let's break it down. Enovix. Their technology, those silicon anode batteries, it's cutting edge. There's no doubt about that. But going from a cool idea to mass production, well, that's a whole different ballgame.
So it's one thing to have a breakthrough. It's another thing to get it out there to meet that global demand. What should people be looking for? Like, how can our listeners track their progress?
Partnerships, that's key. Keep an eye on who they're teaming up with, how they're scaling up production, and most importantly, are they getting those big contracts? Especially in the EV market. That's where the real money is.
It's about proving themselves, showing that their tech can deliver in the real world.
Exactly.
Yeah.
Now let's switch gears for a second. Let's talk InnoData, ticker INOD, for those who don't know. They're in a different space altogether. They've already found their niche. They're riding that AI wave.
And they're riding it well. I mean, their revenue growth is amazing. But how long can they keep that up? The AI world, it's competitive, right?
It is, incredibly so. InnoData, they need to stay ahead of the game. Constantly innovating, expanding their services. They've got to keep those big tech players happy,
It's like a race against obsolescence. They've got to be adaptable, quick on their feet. Now, last but not least, let's talk about AT&T. Stock ticker symbol T, for those who don't know. They're kind of the old dog in this fight, right? A long history, some ups and downs for sure.
They've seen it all, that's for sure. But this shift they're making, it's interesting. It shows they're willing to adapt, to change with the times.
It's like they're hitting the reset button. But is it enough? Can they really compete in this new landscape?
That's the billion-dollar question, and honestly, there's no easy answer. But there are signs, things you can look at.
Like what? Give us the inside scoop. What should our listeners be paying attention to?
Debt. Are they reducing it? And how are they reinvesting that money? That's crucial. The rollout of 5G, that's another one. Can they keep up? Can they lead? It's a tall order, no doubt.
They need to prove themselves, not just to the market, but to their competitors. They need to show they're still a force to be reckoned with. Okay, so we've got three companies, three very different stories.
And that's the beauty of it, isn't it? Diversification. It's about not putting all your eggs in one basket.
Spreading the risk, right. Not putting all your hopes on one company or one sector. So how do you do it? How do you diversify effectively?
It's about finding the right mix, the right balance for your goals. Smaller companies, they might offer more growth, but they're riskier. Larger companies, they tend to be more stable, but maybe a bit slower. It's all about finding that sweet spot.
Finding what works for you, for your risk tolerance. Now, let's talk about those lower price stocks for a second. They're tempting, right? The potential for big returns. But they can be a roller coaster ride.
Volatility, that's the name of the game. You've got to be prepared for the ups and downs, the swings. It's not for everyone.
Definitely not for the faint of heart. You've got to be comfortable with a little bit of risk and understand that, well, you could lose money. That's the reality.
And that's why it's so important to do your homework, right? To be informed. Knowledge is power, especially when it comes to investing.
It's not about luck. It's about understanding what you're getting into. So let's bring it back to Enovix, InnoData, AT&T. They're just three examples, three pieces of a much larger puzzle. What should our listeners take away from all of this?
So we've covered a lot of ground, haven't we? I mean, silicon batteries, data, AI, the future of telecommunications. It's been quite the deep dive. But as they say, all good things must come to an end. So for our listeners out there who are thinking, okay, this is all interesting, but what does it mean for me, for my portfolio? What are the key takeaways when it comes to Enovix, InnoData, and AT&T? Well, let's recap, shall we? Enovix, they're the ones pushing the boundaries, trying to shake things up in the battery world. Huge potential there, no doubt. But investors need to keep a close eye on their progress. How's that manufacturing going? Are they getting those big partnerships? Because let's face it, it's one thing to have a great idea. It's another thing entirely to bring it to market on a global scale.
It's about scaling up, proving they can go from startup to major player. And what about InnoData? They're riding high on that AI wave right now, but the tech world moves fast. What's the outlook for them?
InnoData, they've found their niche, but they can't get complacent. They need to stay one step ahead, keep an eye on their innovation. Are they expanding their services? And those contracts, those big tech partnerships, those are crucial because in the world of AI, if you're not moving forward, you're falling behind.
It's all about agility, adapting to the ever-changing landscape. And last but not least, we have AT&T, the veteran of the group. They're trying to reinvent themselves to stay relevant. What are the chances they can pull it off?
AT&T, it's a long game for them. They're betting on the future of connectivity, on 5G and beyond. Watch their debt, see if they can reduce it, and how they reinvest that money. Can they keep up with the competition? Can they be a leader again? Only time will tell.
So we've got a potential disruptor, an innovator, and a company trying to make a comeback. What a lineup! But before we wrap up, what's the one big takeaway? If our listeners remember nothing else from this deep dive, what should they take away?
At the end of the day, investing, it's a journey. It's about knowledge, about doing your research, understand the companies, the markets, the risks, the rewards, make informed decisions that align with your goals, your risk tolerance.
It's about taking control of your financial future, making those smart choices. And on that note, we've explored buy and hold investing, we've unpacked the stories of Enovix, InnoData, and AT&T, and most importantly, we've given you the tools you need to navigate the exciting world of investing.
Remember, it's a marathon, not a sprint. Pace yourself, stay informed, and never stop learning.
Until next time, happy investing.